Welcome from the YouTube channel for Grap Coin, another video providing an update on Doge. Following the break of this triangle to the downside, which was indicative of trend continuation to the downside, the price has essentially followed the forecast to the downside once more. The Doge chart is heavily supported, and a significant rebound is imminent from this area. The current price is quite low, and we have now entered the target region, which differs slightly from the support region. Additional Fibonacci extension levels are calculated in this context using the internal projections of the aforementioned correction. These can be determined by comparing the length of the or signal to the length of the A wave, which is then utilized to calculate them. The overall support area consists of the highlighted Fibonacci retracement zone between 11 and 14 cents, which is situated between the 61.8 and 38.2 retracement levels, with a 50% Fib level up position between them. Another low is not ruled out on this Doge chart, which we will examine in a moment. However, I would like to inform you that a C wave technically encompasses the interval from the 138 extension or slightly lower to the 100% extension of the A wave. Such an extension would result in the wave falling below the overall support area, which would be less than ideal. At the micro level, this completes a wave count to the downside once more. While there is room for further deceleration, I contend that we have entered a region where a rebound is imminent. Now let's narrow our focus on the next upside level in wave 5. I'd like to see the price reach at least 20.26 cents, which would be a twofold increase for this next move up. It could certainly go higher, but let's see if we can first establish a minimum in this region. If we proceed to the complex wave architecture once again, I can certainly generate that. However, it is difficult to pinpoint precisely where this adjustment culminated in this manner. Therefore, this appears to be a triangle to me. As previously stated, it is a triangular pattern that illustrates the impracticality of microcounting due to the excessive number of potential outcomes. On the 25th of April, I could argue that the E wave ended here, but I could also argue that it ended here, which would yield a distinct microcount for the drop, allowing me to fundamentally position it to my liking. One could even argue that it concluded here, although this D wave appears a little peculiar. Given that it appears to be more of a 5-wave move, I believe this one could also be interpreted reasonably well. It provides a healthy D wave in 3 waves. Consequently, I believed I had it here, but that is a bit ambiguous. That is the issue with that interpretation. If we were to now surpass the previous swing high, it would serve as a strong indication that a low has developed. Specifically, a break above 14.6 cents would suggest that not only a rebound but also a reversal from the present region is imminent. In my opinion, microcounting has a great deal of potential, particularly when one is examining a completed Elliott wave triangle. If we ascertain whether the micro is truly counted, I will remove it from the This brings us to the structure of the fall, in which I am classifying this decline as an ending diagonal since the third wave was an ABC. This was the initial wave of 5, followed by possibly 2 waves of 5, 3 waves or 5, and 4 waves or 5 and 4 waves, after which we should ideally experience one more low. Although it is not being displayed, the 5th wave should be an ABC. That does not imply that we do not count 5 waves, rather we only require 3. Currently we have an A, B, and C, but it depends on where I place the conclusion of wave 4. Placing the conclusion of wave 4 here may not be entirely obvious, but I believe I can still construct a case for a completed wave 4. Design structure: the issue is that nobody is sounding the alarm that the low has been reached currently. A break above resistance would suffice to indicate that the low has been reached, followed by the market maintaining a higher low. However, I believe I have already mentioned those levels. Upon a breach of the 414.6 cent level, the subsequent level of resistance should be closely monitored. Thereafter, there is a 15.2 cent increase, followed by a significant climax at 16.5 cents. All of these are confirmation levels, and since this resembles a descending, broadening wedge, an initial breach of the wedge pattern to the upside would lead us to the beginning of that wedge is priced at approximately 23 cents. That concludes my Doge update. Please select like if you found the content to be enjoyable. You are invited to comment and to view Grap Coin. The conclusion of the tale.